I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast, and today we are answering a question that, believe it or not, a borrower, when they call us, and they really sometimes don't know exactly how to frame the question. And today we're going to basically answer that, I guess, that question that borrowers really have frequently, but they just don't know how to
Right.
ask us.
I'm going to call it it's a problem. They call us with a problem, and it always happens like this. Hey, Tom. Hey, Eddie. We found the home that we want. We've gotten beat before, and we figured out the only way to actually win is to pay cash for it. But yet I don't have cash. But my mom or my dad does. But I need to put a loan on it. Please help us. So that's the framework. People are usually in a competitive setting. They or literally already have the house figured out. One of their relatives has cash, but they need a loan. Can you please help us, Mortgage Brothers?
That's right. And you recently had a borrower call you, and this is why we, just a couple days ago. Tell the audience what it was, what was the situation, and what was the solution that was proposed to her.
Yeah. So she was working with another mortgage broker, and she was quite put out because what she was wanting was to be able to put an offer in on a home, use her mom's cash to buy it, but then she wanted to turn around and buy it from her mother, or she wanted to be able to jump on title and then be able to refinance. But what the other broker was saying is why doesn't your mom buy and then you buy it from your mom? And she said, I don't want to do that. I don't want two sets of purchase closing costs. And I said, well, you don't have to. She's like, well, what do you mean? I said, well, your mother ends up being the lender for you. So it's your mother's cash. She's the lender. And then the day after you close, guess what? We do a rate and term refi.
Yeah. So this is how we do it. I mean, this is how we solve this problem. Whoever it is, and again, it has, if it's a relative, it doesn't have to be a relative, right? I mean, whoever it is, it's going to be buying the house with cash.
Good point. Yeah.
It is not, they are, think about them as just a lender, right? They are your private lender. They are going to put, we're going to help you. We would help you to do that with the title company. They're going to put a note and a deed of trust on the property. You're going to basically use their funds to buy that house, which effectively has the same strength as cash, but you're forming a note that you are going to, after you purchase the property and close on it, we then take the application and refinance. We turn this into a refinance and refinance that loan, that balance.
So, and someone would say, well, then wait a minute. How can you pay cash if your mother, your father, your aunt or uncle is giving you a loan? Well, because what you have to do is you have to essentially tell the seller that though it's a quasi lender or an official lender, it's your mother, it's your father, it's your aunt, your uncle. They don't have underwriting guidelines. They don't have appraisal, requirements. It's essentially as cash. So that's probably one of the more kind of wiggly parts about how this works is just making sure the seller understands that though you are getting financing, you're waiving your financing contingency likely. And guess what? Your lender doesn't have a single employee. And so there's not going to be any hoops. There's no loan status updates. It's not like your mother, your father is going to be, issuing an update for you. So that's a critical piece is that though there will be technically a lender, because if there's not a lender, we can't refinance you, but it's a soft entity. It's a mother, a father who loves you, and they're going to make it super easy for you to get that money.
Okay. So I think that we'll just go into how do you do this? Okay. I think I've already talked about that briefly is you're going to basically talk to your lender, right? And if you were talking to us, we would say, okay, you and whoever the lender is going to be, will talk to the escrow company, the title escrow officer. We want to make sure that escrow officer can help you draft a note. And then they will put a deed of trust. Most title companies and escrow officers will help you through it. And then one of the things that's important is you're going to have a note with the lender, the person that will say, I'm going to owe you this much money. This is how much the mortgage is going to be. This is my interest rate. And this is when this is the term. This is how long I'm going to pay you back. And again, we don't want to see a note. You want to have normal market terms. So you wouldn't be charged, the lender wouldn't be charging 0% interest. We want to see that it's like a market rate, let's just say 4, if it is 4, 3, 5%, that's acceptable.
It's very important that if we do a standard refinance, we have to be refinancing out of a standard loan. There cannot be anything, non-standard about it. So just think of it, there can't be anything free. It's got to have terms. It's got to have interest rates. It's got to have a payment date. It's got to have the deed of trust, like you said. And that title company can walk you through all that. It may be a little scary to you, listener, but the title companies can do it in their sleep. And we can also help you walk through it.
It really is going to be simple. And we are, the whole point, just like Tom said, is we want to refinance a loan, a real loan, right? It isn't just some type of gift they're giving you. It is a real loan. You're going to be, if it takes a month to refinance that, you're going to need to make maybe 1 month payment.
Yep. Okay.
And so
I want to add something there. You brought up this is probably the most complicated part about this scenario is you bring up gift, because a lot of these situations are not only does the parent or the relative want to help with helping pay cash, but they also want to give a 10% down payment, 20% down payment. So one of the things to consider is what we'll be asking you is ultimately, what amount do you want to refinance out? And so if you pay $200,000 for a house and your relative wants to give you a 20% down payment, then we'd only essentially be refinancing them out of 160. So the loan technically only has to be for 160. So you can kind of be thinking about that. If there is a gift, if there is, and every file I've worked on, there's always been a little bit of a gift. So there's always a question. Well, Tom, what is the loan amount for? So we can kind of help you walk through how that works.
When you purchase the house, although you won't be using our services to purchase the house, we will coach you through that. Your lender should be coaching you to go through that, because we want to tee up everything just right so that when you close on that home purchase, we just turn around and start that refinance process.
Yeah. We'll walk you through for 30 days, 40 days, however long your purchase is. And we'll get calls. All right, Tom, we had the appraisal done. Everything went fine. We're still moving forward. Great. I mean, we walk you through it. So the day after closing, guess what? We get that refi application going.
So this is basically one way to purchase a house with cash. Doesn't have to be your cash, but also to almost simultaneously get financing on it. Okay. And I think this is a fantastic strategy that has lots of applications that we've talked about. And yeah, go ahead.
Can I label this podcast? I'm going to call it our have your cake and eat it too. Do you know what that means?
Well, go ahead and enlighten me.
Okay, so this is really interesting. So to have your cake and eat it too means you want to have a full cake, but you also want to be sitting there like eating it while you still have a full cake.
You want to look at the cake.
You want to have a whole cake and be eating at the same time. Well, you can't. Once you start eating it, it's less than whole. So the fact that you can do a cash purchase and still get a loan, it's kind of like a have your cake and eat it too moment. So we really do think it's kind of awesome to do them almost simultaneously in a way. So
okay, well, everyone, we do this every week. If you like this type of content that we're giving, please subscribe to this channel, ask us questions, call us. We're here to help. Anything you need, we'd be happy to just get involved. All right.
Yep. We're here to help, folks. Thanks so much.
Everyone have a good day. Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.